I'm going to go back to my indicator and my script and put my MACD. Okay, right here. There's divergence here because if you see here, see, you have to pay attention when you are looking at it so you don't miss it, okay? You see where I put the arrow, price went up, how many pips? About 50 pips, yeah?
Yeah.
So let's see what the MACD did.
Oh, you can measure the pips on the MACD?
No, I'm not measuring MACD. I'm measuring here, right here. See where I put the arrow?
Yeah.
I put out the MACD. You don't see the MACD now, yeah?
Yeah.
I just measure the pips the way you usually measure it, right here. I said price pushed up about 50 pips, yeah?
Yeah.
You all can see that. But then when we bring the MACD back and we take an arrow and we put it straight where this is,
it goes divergence.
There is your divergence. You see that, Catherine?
Yes.
So this is supposed to, was supposed to go up like this. But instead of going up the same way price is going, the MACD went down. But guess what? What happened after this price reached up here?
It went down.
Exactly. It went down. Look, about 50 pips.
Yeah.
So if
you guys see that?
In the market out here, that's where you're supposed to stop and do some more analysis.
Where?
Look for more confirmation before you decide to.
See, now, first of all, let's back up.
So
you do not, let me make sure that, so I don't confuse you guys. Let me delete that. You do not use your MACD before you mark your chart. And I'm glad you say that, Nancy, because sometimes people will just go and put in a MACD and try to figure it out. Don't ever do that. You will lose money. You have to mark your chart the same way we do every week. All right. I did not do that because I was assuming now you guys know, because we do this every week. So you cannot just come here and just say, oh, let me just put a MACD and let me see what the market is going to do and I trade. Absolutely not. You lose your money. Because even though you have that divergence, there are other things you need to look at. And that's where marking your charts come into place. You have to come and say, okay, remember we said top-down analysis. You look at your month like we always do. You start on the month and you say, where is price going on the month? You go on the weekly. We do this every week. Okay, I see prices going up. It's an up trade on the week. You go down to daily. You ask yourself where price is going. Clearly, do you guys see where price is going? Price is going where? Down or up?
Price is going up and then down, and then consolidating, and then it goes up.
No, where is price right now?
It's going up.
Upward trend.
It's an up trend.
It's going up.
Yeah, it's going up.
You have that. There is somebody getting a trade with a web analyzer. Is that you, Pamana?
It is.
She is busy trading. Okay, now I had it.
Watching this. I got my indicator, but I'm really.
I had that. I am like, ka-ching, ka-ching. Okay.
I can't wait to start trading.
Okay, so that is an up trade.
Okay.
And let's go back to the candlesticks. Okay, so now we have an up trade. I'm gonna adjust it a little bit more. Okay, and that is your week. And if you mark, not week but daily, okay, if you mark it on daily, you have to know what color you use. You can't put a yellow color, then you go on 4 hours and then you're like, I don't know what this yellow line is or where it's coming from. And then you go to daily, 4 hours. Actually, we don't even need to change. You guys see, it's respecting the same trend line from the daily chart, yeah, or daily time frame, yeah. Y'all see this?
Yes. Yes.
So what does that tell you? You have a strong what?
Up trend.
And what makes a trend an up trend or a down trend? Come on, basic.
Highs and
Higher
lows.
high.
Higher
Low.
highs,
Low and higher lows or low and
Higher
low.
lows.
higher
Higher.
highs, higher
Yeah.
lows. Where is this, my thing? Oh, I missed something. This here. Okay.
Okay.
As long as you can see that you are creating, actually, I can use a line. You see? Okay. This high is higher than, I mean, rather, this high is higher than this high. This one is higher than that. This one here is higher than that. Like
And
that.
then
You are creating higher high, higher lows, then you're good. Okay. That
Yeah.
is a trend. Okay. So you guys know all that stuff.
Yeah.
So if it's an uptrend, did I delete the, oh boy. All right, gonna have to draw it again.
That's what the
think
daily.
I did it on the
Four.
daily.
Oh, no, you got it 4 hours. Okay.
Okay, and then we go to the 4 hours and we said it was respecting that. So there was no need to even draw another one. Okay. And then you go to your 1 hour and you see what's going on the 1 hour. What's going on? What do we have here? What do we have on the 1 hour? Is it an up trend or a down trend?
It's an uptrend. Well, it's gone.
Consolidation and then it's going up.
Where you see consolidation?
Here.
Here
the
is
middle.
where? Right here?
Here.
You're saying here, I can't see. You have to tell
Oh,
me.
I'm pointing like here.
You're pointing with what?
With my with my
You cannot
cursor.
see because we are looking
Oh,
at my screen.
Okay.
You need to tell me where to move my mouse to.
Between like between the 4 and I'm looking at the bottom between
Over here?
number, yeah, and up to 12 because it's going side.
Oh, no. Okay, I see what you're saying. Yes, this is consolidation, but guess what? You are way behind. You don't need these prices
You're
over
an
here.
hour.
That
Oh,
already happened. Okay.
Okay.
That already happened. So all you need right now, all you need right now is where price is right now. Okay. That's all you need, where price is. Okay. You can mark, you can tell yourself, where is this price going? This is still an uptrend, but on the 1 hour, you are actually going down. You guys now see this and a pullback and it's going down again.
Yeah.
But
Okay.
the bigger picture is it's an uptrend. So you can't be putting a sell here and expect it to run all the way down. It can go down all the way to. So if I was taking this sell, I would not go below there. I would wait for it to break that swing low. Okay. Now it can run down up to here, but you can see it's been staying up here for the longest. Okay. It hasn't come back to this line. So you can cut some sales. Okay. Some sales rather. This is a buyer's territory. Okay. You are in a buyer's territory.
So when you're looking, excuse me. So when you're looking at the 1 hour, you have to look at the bottom of the date, and that's the part you start with. You don't look what was previously before the day, because you're looking at only that particular hour. So you only look at.
I'm not going by the hour. I'm not going by the hour is just a time frame that the hour just breaks down. How do I explain it? The hour just breaks down your price movement into smaller chunks because each candle is 1 hour. Each candle is 1 hour. It's not the actual. I don't know how to say it because yes, it is the actual clock, but the hour it's like somebody running 1 hour and another one running 4 hours. The one who ran 4 hours still had to run the first 1 hour and then they had to go the other. I don't know how to explain it, but
yeah, I understand.
yeah. So, but you still look to see what price has done in the past. See how you're talking about consolidation? Yes. But when you're trying to determine whether it's a up trend, down trend, or consolidation, you cannot use this consolidation because this happened already. Now, if price was here, if you open and it was here, then you can say, I don't know what to do. This is consolidation, okay? It's not an up trade, it's not a down trade, okay? I'm going to wait until this give me a trade, a clear trade that like this trade here, okay? A clear trade that is pulling back. This is consolidation, but that's not what is happening here. Price left there and it's already here. So we need to know what is the market doing over here, all right? The last few hours, okay? And it's the same, no matter which time frame, even if you're in 4 hours like that, okay? You're still gonna see you had some consolidation in between, but you're always looking from where the current price is right here, right now. So we work our way from where price is and then work our way down. So what I was trying to teach you guys is do not use MACD without marking your market structure that we mark every week, all right? Because you need to be able to find your entry. You need to be able to find your different confirmations that we have already talked about every week here, okay? So where else, where does the another line go?
On top. You see the higher high and the higher low.
Okay, come on, somebody tell me where to put the line.
On, but you already put it.
Yeah, but we need more lines.
On the low.
On the low where? There are
on
numbers.
The left,
you guys see the numbers.
What do you mean numbers?
The numbers are right here. So if I'm putting
108,
my mouse,
below 108.600.
108.600 right here. Yep, that's right. Where else?
Lower.
Okay, what about here? What about right here? Don't forget here, there is resistance here. I know it got broken here, but it hasn't been tested as support. Yeah, it did come here and test it. You see this week? You see this week here?
Yeah.
It did come here, but I do expect when price get here, it's going to stop because of this. It need to be tested well as a support. It got tested here as resistance. Tested, boom, it broke, okay? Now price is coming down. If it doesn't continue to go up, it need to come back to this line and test it as a support. Does it make sense? So you need to do this, which we do every week. But if you guys are not marking a chart, we can do this a million times. It's not gonna help you. All right. So before you do
MACD.
Before you do your MACD. So I'm gonna bring back the MACD. Oops. See what I was saying about continuous drawing? You click on it and it draws and you don't want to draw. Uh-oh. Okay, there you go. So there we go. So let's
Elise, where is a MACD? Where do you, which
the MACD is the one I told you guys last week to take a screenshot. You all remember here? MACD. Okay. This one, Sophie, write it down. Write it down. Write this down or take a screenshot. Unfortunately, it doesn't have a link. It does not have a link where I can send you the link.
Okay.
So you just have to, if you type MACD 4C by VKNO, you just type it here, it will show up. You type it right
on
here.
the chart on TradingView?
Yes, right here. Okay. What was it? What was it? MACD 4C. Okay, this is it, because there's a whole bunch of MACDs. You have to know which one you're looking for. So this is it here.
MACD 4C.
Yeah, but there's more 4Cs. You have to do by the order. This person
by
here.
VKNO
422. That's just a username, really. Okay. And then once you find it, I already have it. I saved it on my screen. So there you go. Oh, I added a double, did I? Yeah, let me delete this. Okay. All right. Does it make sense now?
Yes.
So what we were looking at is this move here. There is an up trade here. And at the same time, instead of getting an up trade, MACD gave us a divergence. I'm trying to line it up so you can see. That's where the move up started and the move down started here. You see? You see that? Now, if you had seen that, then you would have known something is about to happen. And in this case, sure enough, this happened.
It went down.
It went down. You see?
Did you remove the markings of the chart?
What marking?
We just marked the chart. Now.
Oh, no. I wasn't marking it. I was just doing 2 lines. I was just showing you guys that don't do it. No, I just did a couple of them. I didn't quite mark it. So I removed it because I just wanted to focus today on the MACD because we do charts every week. So I know you guys know how to mark your support and resistance.
Right.
So because if you see that, then it's time for you to ask yourself, do I have support? Do I have structure here? Do I have resistance? In this case, you can see right here, you had your right here. Look right here. You see there?
Yeah.
You have an area of structure. Look this. Look at this. What else do you guys see?
Three times it touched resistance.
Exactly. Good job, Cora. There. You have that. You have this one here.
I think it's almost 4.
You have this one here. Yes, so whoever said almost 4 is right.
Yeah.
But the 4th one, you did not have the 4th when price was yeah, this is what happened. Let me show you guys. I'm telling you, trading is not hard. Trading is not hard.
You have to practice.
It takes practice, yes. So if price was here, you didn't have the 4th touch, but yes, you are right about 4 touches. But when you have 3 touches, what do we say always about 3 touches?
Price is going to, it's going to reverse.
Exactly. That's a reversal sign that price could go down. Now, it could break. We don't know. But if you had checked your convergence and divergence, now you are seeing 3 touches, but you're also saying, wait a minute, I got 3 touches. I have support and resistance. I have an area of resistance here, definitely. And then, wait a minute, my MACD is not agreeing with what price is doing. Price is pushing up, but MACD is pushing down. Why is that happening? Then you chill and wait. Or if you're marking your chart, you know where to enter or where to set up your stuff. You see? So that happened. Okay.
So
just consolidated forever.
I know, yeah. Don't we hate that?
Yes.
Okay, go back, test that same area again. Okay, now you have 4 touches. Whoever said 4 touches. Okay, now you have 4 touches. You're like 4 touches, boom, structure, divergence is already there. So you clearly knew that sell was coming. You could see it from a distance. You could smell it from 10 miles away. And you could have cashed a good 50 pips from there. You guys see that?
From where?
From up here, from where price started to go down.
From the 4th, it goes.
From where the 4th touch is. You don't necessarily probably would have entered there. I'm not saying you entered exactly there. Even if you caught it down here, you still caught 30 pips. You can do 2 orders of 30 pips. That's 60 pips. Okay? That is 60 pips. But
so Liz, I have a question.
Sure.
So once you confirm that the, with a MACD where the price is going, is that now when you decide where to enter?
Exactly, because you already marked your chart. You already have your support line. You already have your structures. Once you see this happen, you're like, I got 4 touches. And now it has come back another 4th touch. And MACD is telling you something is about to happen, because even though price is showing is going up, your MACD is going the other direction.
Yeah.
Some people, when they saw this divergence here and they saw the support and all these touches, they already put in, when price was going up
pending
here,
order.
they already put, what type of order? Yes, what type of pending order would you put here?
As a sell.
Now I want Sophie to say it because she's the one who's been working hard on this.
I've been struggling with those.
Okay, so you are going up
a
here.
sell stop. I sell something. I sell
No, not to sell something.
I sell limit. I sell limit.
Sell limit. Yes, you got it.
Yes.
I hope you're not
Yes.
guessing.
No, I'm not. So I'm
Okay.
not guessing. It's a sell
Okay.
limit.
Yes, it's a sell limit. And why is it a sell limit? Explain to them why it's a sell limit.
Because
Hold on. Let me reset this because I messed it up. There you go. Okay, now you are the teacher. Tell them why you decided to set a sell limit here.
Well, because okay, I'm looking at the where the trend is going, and so I know that's going to be a sale.
Hold on one second. Hold on one second. Let me make it even. Guys, understand this thing here. We'll make money. So, price is here. Okay, it's going up. You decided you're gonna put a sell limit over here.
Right.
Why?
Because
why is it? Why a sell limit instead of a sell stop?
A sell limit. Oh Lord.
Anybody want to help?
Yeah, somebody help me, please.
So, okay, let me try. Not that I know. So I'm looking from where you mark the chart, the three yellow things where you mark it. So the resistance was tried 3 times.
Yeah.
So that time you're gonna wait and see where the price is gonna go. So if it doesn't break that resistance, so it's going down. So you're gonna put your alert right below or right above where you have marked it. So if it's gonna go up, then that will be, we do a buy.
Yeah, but right now we are just trying to figure out why does she want to have a sell stop here instead of a sell limit instead of a sell stop.
Because the market is still going up, you want it to go up, and when it starts going down.
Exactly, that's exactly what I was looking for. She is putting a limit order because she want to go down, but this price is going up. So she want this price to go up, and when it hits here where she want to enter, she is saying this market, this price is coming back here, just like it did here, just like it did here, just like it did here. So she expected to go up to this line again. That's why you have to have your lines. And when it gets here, yes, it could break, but she's saying, based on what I'm seeing, okay, it's not going to break. You know why it's not going to break? Because she has divergence already, okay? She has divergence here. That's why, Sophie, when you're saying, where do I enter? I'm like, you can enter anywhere. You can enter here, you can enter here, you can enter here, you can enter anywhere. But of course, you want to maximize your profit. You don't want to enter when the move is done. So you want to enter around here. But for me, if I wasn't in this trade anyway. Let me delete this. Let me move it. But if I were to get in this trade, I would have gotten into that sell comfortably because I have support here. I have those 3 touches before, and then I have the divergence showing me it's going to drop. Now, this doesn't mean it's going to sell all the way down, because at the end of the day, this is still a buying market. This is still a buy. So I'm just trading these pullbacks. Does it make sense? So you would have known that this sell is coming because of this. Where you decide to enter, whether you choose to enter here or a little bit below, is totally up to you. There is no specific marking that somebody can say, enter on this point. Some people entered here, good for them. Some people entered on this candle, good for them. Some people did not catch the move until maybe around here, maybe after this area here. And they caught how many pips? Let's see. Somebody entered around here, and they caught about 23 pips, and that's okay. All right, as long as you catch the pips. So all you have to do is ask yourself, if price get here and it breaks and reverses, where do I want to enter? So I'm not expecting you like to always enter on the line, because remember what I teach you guys, that this is a zone. Okay, this is a zone. It's not one line. Okay, it's a zone. That means price can even go a little bit above this line. Okay, it can go a little bit above that line because it's a zone. Okay, anything around the zone, and again, there is no measurement for the zone. The zone could even be 50 pips. Okay, and then you take it down. Okay, but you also have to remember the bigger picture is, where is price going? On the bigger picture, you go to your daily, you look, and you see where price is going. Is it going up? Is it going down? Is it going whatever direction? Because you don't want to get caught up. So if you enter a sell and the price is going up overall, you don't want to get caught up in putting a sell and you're expecting, okay, now it's going down. I got divergence. I'm going to take it all the way to South Pole. You can't do that because at some point it's going to go back up. Yeah. So that's why you have to set your daily goal for your daily pips. What is your goal? Is it the 30 pips? If it's, again, I always tell you guys, even though there is 50 pips here, okay, and you can see here, let me show you guys. See where price stopped? Oops. You see there where price stopped?
Yeah.
Right there. You see that swing low here? Look to the left. Did price stop there before?
Yes.
Exactly. So that's why price got here, went up, and maybe it will come back to the same line, test it at that time and go up. You never know, or break, but probably stay up because it's an up trend. I think, I don't know whether this is the one we looked at the beginning. All right. So basically what you're looking for is your divergence and convergence. For example, this area here, price went sideways. Oops. Uh-oh, what happened to my thing? And did the MACD go sideways?
Yes.
Exactly.
A little bit. It went up and down, but it's
it's
like
more
a general
sideways. Yeah,
convergence.
it is.
I mean,
it is
like
sideways. It is sideways because even here, even though this is consolidation, the market went up, down, up. Even in consolidation, the market still go up and down. You just don't have a trend, okay? Even in consolidation, you'll see charts of up and down, up and down, up and down, but you cannot say, I have an up trend. Here, you cannot decide. Right here, you don't know. If this is all you're looking at, you don't know whether it's a downtrend or an uptrend. You really don't, even though there's small charts of up and down. So it's the same here. The MACD agrees. Then you move and you see if you find another place. See, here is another place. Where is the price going?
Up. It's going up.
It did not go, it wasn't a steep climb, okay? You see that? That is more of a sideways. Yeah, here you have charts of up and down, but we want this to go up like this. This should be facing the same direction this is facing, which is up. But this is refusing to go up, and instead it's literally going sideways. But what followed that?
Down. Down move.
What followed that is a huge drop here.
Yeah.
You see that? 129 pips drop. And then it consolidated here, went up here, and it went up here. So you have convergence, and then you get divergence again. All right? I don't want to dwell on this, but I want to make sure that you guys understand. But you have to practice and go practice on your chart and see it. Because if you don't see it on your chart, then it's going to be hard for you guys. It's going to be extremely hard to pick them up. You have to practice. Because this is just an extra confirmation for you guys. Hold on. See, like,
so how do you know when to put your stop loss? Do you look at the time that is consolidating from the time it starts and that below that line?
No. That's a different thing. Your stop loss are based on the swing high and swing low. But there is a calculator. So I don't know if you watch my videos on YouTube. I have videos 3 videos for 3 weeks where we have done stop losses. So I'm going to have you watch those ones. But your stop loss is if you're trading here, if you're going up here, your stop loss is supposed to be below your swing low, the last swing low. Okay? You're supposed to be like 30 pips below or 20 pips below your swing low. But even though you do, let's say 20 or 30 pips, you have to know your risk management based on your account size, because you can't just trade, let's say $1 or $2, and now you have 30 or 40 pips below your swing high. Because if God forbid that is a losing trade, then you're losing $40, $80, $100, and you don't want that to happen. So no matter where you put your stop loss, you have to calculate your lot size based on your account size. But I do have a training on that, so I'll show you the video. Okay. So where else do we see divergence? You guys don't see divergence anywhere? What about here?
Yeah. What do you call that?
That's 103 pips move up, yes?
Yeah.
Okay, if I'm confusing you guys, let me know.
Yeah, that's now I'm a little bit confused now because
Okay, hold
you're
on.
asking. Oh.
Okay, hold on 1 second. So then you can ask. Just hold on. Okay, go ahead, Sophie.
No, I think when you said where else do you see divergence, I was like, okay, I think were we looking for divergence and convergence? I'm kind of like confused.
Okay, convergence just confirm for you that the move you see, for example, here you have convergence, okay, or confluence, okay, price pushing up, yeah,
right.
And if you come here, oops, sorry, if you come here and you line them up, always line with your crosshair, yeah. Okay. Where did price go?
It went up.
So are they matching?
Yes.
Okay, price went up here, 103 pips, yeah?
Yes.
Where did price go down here on the MACD?
Sideways.
Are they matching?
No.
So what does this, what would this have told you?
That price is going to
something
reverse.
is going to change. And did price go down immediately?
Yes. So which is the divergence and so that's the divergence right there.
137 right? Pips. No. Divergence is when two assets, okay, are going in different direction. Two assets that are supposed to go in the same direction, they go in different direction. It's like a marriage. You're supposed to be one. Now you separate, you are two. You are different ways, yeah? But you're supposed to be together. So it's the like same thing with trading, okay? Think about it as a marriage. A marriage is supposed to be together. You do not want a marriage that is going apart, yeah? So divergence is the same thing. We want, if this is an uptrend, this here should be an uptrend also.
Going up. Okay, so
like
right here where we are, that's a divergence where you drew those two lines. Okay.
This is divergence because price is going up here. See? Price here pushed up about 106 pips, yeah? Right. But guess what? Over here, this refused to go up.
Yeah.
This was supposed to do this. They were supposed to go there.
Nancy has a
question. No, I was just going to tell Sophie. So you have the dad going up and the mom going the opposite side.
Exactly. Exactly. I like that.
I like this.
And you can run a household like that. Yeah?
You can.
So if you see mom and dad are going different directions, they are doing their own thing, the kids will say, uh-oh, there's some trouble in the horizon. Yeah? So if you have grown-up kids, they can start sensing that something is not right. Yeah?
Right.
And they might say, let's get out of here before trouble comes. So that's what you do as a trader. You say, let me get out of here before trouble comes. So if you are trading.
These analogies are good.
So, no, yeah. So if you are on this, Sophie, if you're on this trade here, let's say you are buying here, because you can clearly see it's an up trade, yeah? And you see that this divergence, it's time for you to close that order and get out.
Yes, and get out.
Now, if you're trying to come in, like let's say you are marking your chart so you can see where you're going to enter, and you see this, then you're like, uh-oh, I see divergence. Even though I see it going up, I'm not gonna jump in as a buyer, even though I have a trade that is going up. Right. I am going to wait and see what happened to this divergence.
Yeah.
And clearly, you guys know this. Honestly, you guys, look, you know what would have given you a clear go ahead to sell? Have your, what do you have here? You have your support and resistance, yeah?
Yeah.
Come on, guys, look at this. You have this here. You have your touches. You can count them. But guess what? Look at this. Look at this. You see that? Let me make it yellow. Do you see that? What is that?
A week.
What does that week tell you?
The market tested that area and came back.
Rejection. Rejection of who?
Of the resistance.
Of the buyer.
Rejection of resistance. Who say that?
Me.
Okay, it's okay. That's all right. I guess you could say
it rejected the ceiling.
You could say that. You could say that. Yeah, you could say that. But basically, the right way to say it is a rejection of the buyers. Okay, the buyers push the market.
To say.
Hold on. Let me move this. Watch, guys. The buyers push the market all the way up here. Okay, this candle was once green. Remember, we did this before. This candle was once solid green candle. But before the hour, which time frame is this? 4 hours or 1 hour? What are we trading on? 1 hour. Okay, before the 1 hour was over, sellers came and pushed that market all the way down. So you have long wick. Anytime you see a long wick, it's a good sign that buyers, whoever was driving the market, has been rejected. Okay? Total rejection. Okay? And now you have a resistance, which is correct. Whoever said the resistance have been rejected, I guess, I could not break the resistance, has stopped the market. But now you have support and resistance sitting here. In this case, resistance, because price was going up. And then you have the wick. And then, boom, you have divergence here. Do you see here? You have divergence. You guys see this? Because I'm telling you, when you learn how to look for this simple stuff, you start making money. Yeah, but if you're not practicing, you're not gonna make money. Price came down. Of course, you don't get in here because you didn't know that the market was going to go down there. The minute I saw this, if this was in, and I catch this, I am in. Wherever I catch it here, I catch it there. Divergence is there, the rejection is there, resistance is there. It's touch 1, 2, 3 touches, and I am going down with it. And there you go, 110 pips. Now, you don't have to go all the way down to 110 pips. For me, I would have just now, this is where you are mark charting. That's why I said you mark your mark charting. What did I say? Chart mark. This is where
chart marking is necessary.
Exactly, because even though it went down 110 pips, personally, this would have been a major area for me. You see this one here? This one for me would have been an area that I would have taken my profit right here. Right there. You see there? That's major for me. I would have thought, okay, my stop here. It continue to go down. Okay? But I would have come out there. I would have taken my profit there. Okay? And I would have entered anywhere here. Okay? Anywhere here. All right? Especially after this week happened. Okay? And don't forget, look, after that week happened, you also have this this candle here engulf this body here. So that's another sign that you had there. So could have got good pips, or just go for 30 pips and do 2 or 3 orders. There you go, 90 pips. Okay.
What if you don't get off and just ride with it?
Well, you're gonna get caught up because it cannot ride down forever. Look, it went
it
up.
Right there, but it will go up again.
Yeah, then it will eat all your money that you made. If you keep riding and riding, you have to protect your money. Market is not going to keep going down, 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 or up, 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 up. That's where you take your money at some point, because if you are in this and you keep saying, oh, I'm making money, I'm making money, I'm making money, I'm going to stay, I'm going to stay. Boom. It will start to go up. It's eating your money, it's eating your money, it's eating your money. Or you give it all back. Look, 100%. Did it go up back 100%?
Yes.
It did go up 100%.
And then you get your money.
Huh?
So you get back your money if you stayed in, you know.
Well, you have to protect your profit. That's why we have a TP. You have to protect your money, because what I'm saying is, if this went down like this and you're making money going down, but you can see clearly it stopped going down and started to go up. If you did not take out your money, you are still in the market, and you did not take out your money, when the market is going up, what is it doing? It's taking all the money you earned here, it's taking it back, it's taking it back. You might even end up at minus because this was your entry here. And if it keep going beyond your entry, now you're at -1, -2. You know what I'm saying?
Okay.
But once you learn, Catherine, that will never happen. Trust me, because once you enter here, if I entered the market over here, okay, then I have my stop loss up here. Is where this week is. I have my stop loss right above that week. All right.
Okay.
I go down. As I go down, I move that stop loss. Okay. Once I start making money, I am not going to have a stop loss sitting up here, and I already made $100, $200, $300. Okay. That stop loss has to quickly move from there and start protecting all my money. Okay.
Oh, move it down.
You guys saw last week that within a second, the market can jump up 500 pips.
Okay.
So if you still have your stop loss here, even after earning all this money, what happens if this market jump up within a minute? It will touch your stop loss, yeah?
Right.
So that's why you have to move your stop loss as you earn the money. You're not earning money quickly in second. You can see the market move slowly by slowly. So it's not like you're sitting there just moving your stop loss. No, you're gonna do it little by little, okay?
Okay, but can you put many stop loss instead of having to move, say, because if I put it like where you say up the wick, and then I can put it like.
You can't have more than one stop loss. You can only do one take profit and one stop loss.
Okay.
So that's why you have to move it, because you can have two. It would be good if we can have 2 or 3, but the market doesn't work like that, because then we will protect our money, and they don't want us to protect our money. They want to take our money. They want to make it as difficult as possible for us, so they take our money. But we know how to not let them take our money. So you protect it. You change the numbers where your stop loss is. Within 15, 20 seconds, you can change those numbers, or you can just move the line, okay?
That means you have to be watching it, I cannot.
That's what I just said. The market move very slowly. You're not sitting there 24/7 watching it. But at some point, you're gonna have to move that stop loss, okay? For example, when you mark your chart, that's another thing. When you mark your charts properly, unless there is news. Can you guys hear me? All right, now. Yeah, I'm back.
Yeah,
did you take over? Did anybody start teaching?
Almost.
Awesome. Anyway, we're gonna go anyway. We've been here for 2 hours, way more than I wanted to, and there was something else I needed to teach you guys, but I was explaining something which I now don't remember what it was. Hold on, you guys.
We're talking about stop loss, and you say you cannot. We cannot put so many stop loss because.
Oh yeah. You can't put too many stop loss in the. What chart are we working on? I don't remember what we were looking at now.
I think there was a JP something.
No, USD. No, USD JPY.
JPY.
Okay, yeah, this one here. Yeah, you can't have too many stop loss, but as you learn how to trade, you will see. Oh, I was saying, if you had marked your chart properly, even if you don't move it, look, you would have taken your profit before the market reverse. But for me, I would be like, no, there's no way I'm gonna have money. And then, but Catherine, you are saying that means you have to move, keep looking, remember, each one of these candles takes a whole hour to form. Okay.
Yes.
So it's not like you're gonna enter the trade unless that's what I was saying before I got taken out. Unless there's breaking news that is going to just come and quickly shoot the price up. Okay. Yes. Otherwise, it's gonna move slowly. Look how many hours are here before you go here. I could have entered this trade. What time is 1300? 1 o'clock? 1 o'clock, yeah? That's 1 o'clock. And I did not take my profit until right here, which is 7:00 is what time? What time is 7:00? 7 a.m.
in the morning.
7 a.m. in the morning, the next day. You see what I'm saying? The next day. So basically, these took a good. Can you guys hear me? Can you hear me?
No.
Yes.
Yeah, we can hear you.
Oh, Anyway, it's 11 o'clock and my computer is acting up. So, or not my computer rather, but my Zoom or my internet thing. But does it make sense what I'm saying, Catherine? It moves really slowly.
Yeah,
it moves slowly.
I was trying to, Teresa was asking who, like, what's the name of the webinar, and I had sent it to her.
I don't know what you mean, the name of the webinar. She just need the link.
Yeah, I sent her.
The ID, you mean?
Maybe the ID.
If she has the ID or the link, either one of them would have brought
the
her
name
here.
of the group. Yeah, and I told her it's a Forex trade.
Sorry, Liz, to bother you, but I'm curious to know if the impeachment news affected the markets yesterday.
The what news? The US dollar? Probably a little bit, but not really, because it hasn't gone through the Senate yet, which, like, the market knows the House was going to impeach him, but the Senate is not going to do it. So I don't think the market is scared about the whole thing. Like, everybody know the outcome. You know what I'm saying?
Right.
Because even if he was impeached in the House, the Senate already said they are not going to impeach him. So everything is going to stay the same. You know what I'm saying? There is nothing that is going to happen. If Trump is going to be president, he's not going to be removed. So the market is not thinking. Now, if they were not sure what is going to happen in the Senate, let's say there were some Republicans saying they're going to remove him, then the market will be wild because they don't know. You see what I'm saying?
Right.
But right now we know how the book ends.
Okay.
Yeah, but he can impeach, but he doesn't have to be removed from the office. Just like
but that doesn't affect the market. How does that affect the market? Impeachment it's just a bad record on his presidency. You know what I'm saying? Like, he's gonna go down as a president who was impeached. But as far as us and the US dollar market, him being impeached and not being removed is not going to do anything to the market. The market is not going to say, oh my gosh, he's got impeached, but he didn't get removed. They will go wild if he got removed. Or if they were not sure. You see what I'm saying?
Yeah.
If they were not sure what the Senate is going to do, then that will be like ridiculous. Okay, the big day that is coming is November next year when we have the general election. So that's the ones that you guys have to watch. But that's about 12 months.
We better know how to.
We'll have made a lot of money.
That will be a day where a lot of money will be made in the market. I can tell you that. Okay, that will, even probably the weeks leading to that. Okay, because now that is a place where the market doesn't know who is going to be president. You understand what I'm saying? Just like you guys saw last week in the UK, you saw what happened in the UK. So when the market doesn't know, then the market does not like when they don't know what is happening. Okay, but when they already know what is happening, even if you might see maybe that day a few move here and there, but the movement, if you see a movement in the market because of impeachment, it is literally about faking us out, and they do that. They will do that. The banks will take advantage of news like that, not because they are scared, but because they want to take our money. They will try to scare you that they are scared. They shoot it up, just like they do on regular Newsday. Like even here, if you go to GBP, look what they did even with the GBP. Where is that pair that we had? Look at this pair. Okay. Market. This was Thursday. I think it was Bamana who was saying when I was posting on Thursday. You see here, market went up how many pips the day they had the elections in the UK? Okay, hold on. Let me push it. So you guys can see. Hold on. It's not even 400.
You can't see anything.
Okay, there it is. Oh, you guys can't see my screen?
No.
We can see the pips.
Yeah, 527.
I can't see what happened.
Can you guys not see my screen?
I can see it.
Okay, Catherine, I don't know why you can't see it. They can see it. It's right here.
You see it now?
Hold on, let me start again. You don't see my screen?
No, I don't know what happened.
What do you see on the screen?
I just see your name and
Oh, maybe on the wrong screen.
Yeah, because the others can see.
I was seeing it. I don't know what happened. That's okay.
Okay, so you see, you guys, the market went up over 500 pips, yeah? Within 1, 2, 3, 4 hours. But this move here, like I told you last Thursday, this move here happened in less than a minute. Remember, just this one move here. Just this one move, which is probably how many pips? 408 pips. That happened within less than 1 minute, okay? But the way the market play is, guess what happened right after? They had to come back and even out the market. Otherwise, they will crash the economy. Look what happened. Did we come back 545 pips? Look, it came back and gave up all this move that it did. We are right back where we started. Because if the market was allowed, first of all, you have to know that World Bank control this thing. Because if the Forex or whoever pays, whoever is controlling the banks, if they were to let run wild like this, where they're pushing the market up 600 pips, the economy will crash, just like we had that crash. They cannot, first of all, there is a certain number of pips they have to move the market in a week. And they cannot go above that or below that. And if they go below that, the following week, they will come and make up those number of pips. Does it make sense? So when you see wild moves like this, trust me, what goes up must come down. And a lot of people made money coming down this way because they knew this is just taking advantage of the news. Okay? Does it make sense?
Yes.
The real move was when they were not sure, because over here the market already knew. Okay? But when they were going down, when price was going down here, because price shot down from 3 a.m. at night, right here. You see right here? When this price was going down, the market wasn't so sure, okay? But why did they jump up when they already knew what was happening? It was manipulation, pure manipulation, because somebody saw this candle and boom, a lot of people put buy order here. You know what happened? They got caught up.
They went down.
They put buy order and the market ran the opposite direction. Okay, so this was to just make people buy. This was always a selling market, but they manipulated the market here and then they pushed it down and they recovered all the pips that they pushed it up. Now we are back to square zero where we started a week ago. Does it make sense?
Yes.
And you see that in pair after pair after pair. We can open a new pair. Let's find another pair, and then we'll be done. New chart. Let's look at NZD.
I can see you on the phone.
Oh, you can see on the phone?
On the phone, yeah, but not on the computer.
GBP,
that's okay.
NZD. Okay, so let me quickly pull my template. Okay, here is another one, GBP NZD. They push the market. See, this was the real move here. You see this move here? 300 pips. This was not market manipulation. They did not know how the elections were going to go in the UK last week. But as soon as they figured it out, they ran the market up right here. They ran it up 573 pips. You see that? 580 actually. About 500 and, oops, sorry.
Somebody got that.
About 580 pips. You see? But look, just like the other pair we just looked at, did they give it back? Sure. Yeah. Look, right there is where they started moving up. They gave it up. Because the market was already a sell market, not only did they give it up, they continue the direction the market was already going. So you have to know how to trade the news. So even now, whoever was asking about the impeachment, yeah, they might decide to take advantage of that just to kind of get us all wild up, okay? But it's not a big deal. They know, we know that they know that Trump is not going anywhere from the impeachment stuff, okay? Yeah. That's just politics. All right, so I think we are done for tonight unless somebody has a question. There was one thing I was going to teach you guys today, but time ran out, so I'll teach it to you on January 2nd. I hope that what you guys have done this year, even if it's just a few months, has given you guys the foundation. your
Yes, it's
foundation
a
to
lot.
hit the
Thank
ground
you.
running next year. The next
Mm.
2 weeks and learn. Thursday, we are not going to be here. If you don't have visitors and you're not traveling, go on the computer, those 2 hours that we get together and watch some videos, you know? And if you just take the next 2 weeks and learn, watch some videos, go back to the academy, follow some people. Merry Christmas to all of you ladies, and I
Thank
will
you.
see you January 2nd.